We have fantastic panelists, but I want to particularly acknowledge one of them, Augustine Carstens. Augustine prepares to leave his role as General Manager of the Bank for International Settlements. Many of you have known him. Those who don't, he is an exemplary public servant, both in his country of Mexico and as an international public servant, including as Deputy Managing Director right here at the IMF. Augustine, I have befriended you when you were in Mexico as finance minister, and I'm so proud to call myself one of your friends. Your drive for innovation at BIS puts you literally in the center of this panel. Thank you.
Yeah, thank you so much, Kristalina, for those introductory words. The topic of the panel is the tokenization of the financial system. And of course, being at the International Monetary Fund here, it is the international financial system that we have in mind. The topic for the panel is about the technologies. But technologies are, of course, only a method to get to the foundations of payments and security trading more generally. And I think everybody in this room recognizes that it's the trust in the financial system that is foundational for stability and efficiency. Our focus at the IMF is, of course, on the macro financial, the macro criticality of these developments. And I'm extremely happy to have 4 panelists with me that can expand on these topics. To my left is Michelle Bullock, the governor of the Reserve Bank of Australia. Michelle has for many years been working on payments issues as well as broader central banking issues. Augustine Carstens has already been mentioned. Augustine is the general manager of the Bank for International Settlements. He was a deputy managing director here at the IMF and was previously also the central bank governor as well as the finance minister of Mexico. Augustine's right, I guess, from your perspective, is Piero Cipollone. Piero is a member of the executive board of the European Central Bank, where he is responsible for the Directorate of General Market Infrastructure and Payments, among other things. And of course, Piero spent much of his career at the Bank of Italy. Finally, we have Mr. Nandan Nilekani, who is the co-founder and chairman of Infosys Technologies. And he was also the founding chairman of the Unique Identification Authority of India. I think this is something that we are all looking at with great admiration. And, you know, this technology really has been transformational for the financial system, the payment system, but more broadly, also other government systems in India. So welcome. And let me start with a first segment on recent developments on tokenization and platforms. Governor Bullock, the Reserve Bank of Australia has made a kind of strategic commitment to prioritize work on wholesale digital money. So can you explain a little bit why you have been focusing on the wholesale aspects and what your recent thinking in this area is?
Sure. Thank you very much, Tobias, and it's great to be here with a very distinguished panel. Just a little bit of background first on where we've come from in Australia on this. So, like most central banks, we have been working in this area of central bank digital currency. What is the case for central bank digital currency? And we've been thinking about the retail and the wholesale side. We did a project a couple of years ago where we actually put a pilot up, and we had a live claim on the central bank, and we asked for expressions of interest to use cases. And what we found from that was that there were some retail cases, but there was also a great deal of interest in the wholesale cases, and particularly, as we'll hear, on how that might interact with tokenisation. So we've done some work also with our Australian Treasury in September 24, where we published a piece. We set out a strategic direction, a work plan for how we were going to do this. And in that, we actually decided that the strategic direction for us was wholesale CBDC rather than retail. And I think that comes from the fact that we think the wholesale is more promising as a potential innovation here. The fact is, in Australia, we are very well represented with a retail payment system that's very good, it's very innovative, it doesn't really need anything else. So I think wholesale, this was the reason that we went this direction. So, as I said, I think one of the things that came out of our live pilot with CBDC was this idea of innovation and efficiency in financial markets and how that might interact with the concept of tokenisation of asset markets. And I think we have observed that in Australia, at least, the Australian market participants are all actively exploring this because they're thinking there might be efficiency gains for them, trading, reducing settlement risk, and also reducing reliance on intermediaries and taking cost out of this. So they're all engaged in that, and we thought that because central bank money is the safest settlement asset, then it would be sensible for us actually to look at whether or not central bank digital currency, a wholesale central bank digital currency, could play a role here. So what we're thinking about, we've launched a new project now, and it's in collaboration with a private sector, a sort of a publicly funded group called the Digital Finance Research Centre. And it's going to explore how different forms of wholesale digital money, so CBDC will be part of it, but others as well, and how we might have those settlement arrangements involved with tokenised assets. So we published a consultation paper back in November last year, and we called for industry expressions of interest to test different settlement models. So in that, I'm saying wholesale CBDC is one, but we're also thinking about private sector stablecoins, tokenised deposits, RTGS systems. So we don't want to have a presumption that wholesale CBDC is necessarily the answer, but we want to open the question up about how you might have different settlements associated with tokenisation. So at the moment we're reviewing those submissions, and then we're going to make some selections of partners to work with on this particular project. There's a couple of things we want to understand here, I think. What types of central bank money might need to be available, and who might we have to issue it to support tokenised markets? What sort of capabilities might that money need? What might be the operational and policy implications of what we're doing? Tobias already referred to financial and monetary stability, so what might be the potential implications there? And also, again, are there private forms of money that might emerge to fill this void as well? So I guess from our perspective, we see the two-tier monetary system with both public and private money as something that will continue, and we're just trying to get our hands around how they might work together in this context of tokenised asset markets.
Thanks so much for those insights and this broader thinking around the payments aspects, but then also the public-private sector roles, as well as broader implications for the financial sector, I think are very well aligned with our own thinking here at the IMF. So let me turn next to Piero. The ECB has also done quite a bit of work on tokenization, has run some experiments, and has particularly focused on digital ledger-based transactions in central bank money. Can you illustrate a little bit how your thinking has evolved over time and where you are at the current juncture?
So, thank you, Tobias. Thanks for having me in this important panel. Let me say from the beginning that the ECB, we might be old school, but we still think that central bank money has a key role to play in the economy. First of all, it connects all parts of the economy. Second, it provides a stability anchor for financial sector by providing, as has been said, the safest asset that you can imagine. And this is true at the retail and the wholesale level. Philippe Lane, our chief economist, just gave a speech a few days ago in which he illustrates clearly this point, also looking from a historical perspective. So if you have time, just have a look at that. However, the way we pay is changing fast. And it's changing both the retail and the wholesale. Is changing because of preference of people and technology. So we think that if we want to stay relevant in this space, we have to modernize the way we provide liquidity to the system, again, at the retail and the wholesale level. And that's why we are venturing into the project of the digital euro for retail transaction, but also investing heavily on how to provide liquidity for those that wants to develop and trade asset on DLT. So this is the starting point. And to stay on the specific of the wholesale, we have been observing that there is a growing interest from market participants to explore how tokenization and DLT can play a role in improving the current situation of financial market, essentially because DLT and tokenization allow a different representation of assets in a digital form, and these allow many new developments, and we can dig on that later on in the discussion. And we also observe that the Europeans and in Europe, banks are pretty active on this field, in this space. From our contact with the market, we see that 60% of the banks are interested in experimenting with DLT, and actually something like 22% of them have already put in place some sort of application implementing DLT. Also on the security sides, we have seen a growing interest in issuing that. We have also at the European level a specific legislation that allows that. So this might have, improve the conditions so that bank venture more easily into this. So confronted with this scenario, the ECB, we think that we need to be in this space very early on for two fundamental reasons. The one reason is the fact that if we are not there with central bank money, somebody else will be there. We don't have anything against, commercial bank money, but certainly we have to recognize that we run the risk of new fragmentation of the system and credit risk, which is inherent into commercial bank money. So that we need to be there immediately as a central bank money. And the second reason is that market is asking us to be there. From our contact with the market, we are encouraged to offer central bank money because market participants say that this is essential for the market to develop. So with this situation in mind, last year from May to September, from November, we launched an experiment, work on allowing experiment and trial so that people that want to experiment and transaction on DLT could settle this transaction in central bank money. The concept that we explored was this concept of synchronization or coordination of the asset transaction on DLT with our target services, which is our traditional system. The three central bank of the Euro system, they invented a very interesting solution so that you could coordinate the transaction on DLT and the settlement on central bank money in the RTGS, basically. The experiment has been a big success. We had more than 60 participants exploring many use cases, big issuance, so a growing interest, more than what we were expecting. So the question is, what do we do from there? So we want to continue and get into production, move from the experiment mindset and go into production, and we will devise soon a solution in which, through this concept of interoperability, allowing the market to grow in expanding their business on DLT while providing for us central bank money. Again, we are not at this stage putting money on the DLT, on the same DLT where the assets are. This is for the short term. However, we are thinking about what to do in the long term, and here we are open to a much more possible integrated solution where we can have a unified ledger where you could have on the same platform central bank money, commercial bank money, assets. BIS has been very vocal about the benefits of all this, and this is a possibility. An alternative possibility would be to have an ecosystem of fully interoperable ledgers, which could take care of, could specialize for different use case or adapt to specific condition, or even allow for a better transition from the traditional RTGS to this new solution. So the news is stay tuned, more to come.
Great. Thanks so much, Piero. And let me just interject a little bit of a side note on vocabulary. So when our panelists talk about tokenization, distributed ledger, or blockchain, these are fairly interchangeable to a first-order approximation. So it is there are some minor differences, but DLT, tokenization, and blockchain are more or less the same thing. So Agustin, the BIS, the Bank for International Settlement in Basel, has been very active through its innovation hub in particular, but also its other activities at the BIS in terms of working with central banks to explore innovation that can be beneficial for many countries around the world. And you have been particularly working on tokenization, with central bank, but also with commercial banks and with technology firms. So where are you, having done this for a number of years now, where is your thinking today, and how do you see the contribution to the financial system and so like the future of tokenization and finance?
Well, thank you very much, Tobias. It's great to be in this panel with two very distinguished central bankers, Michelle, Piero, and a tremendously dynamic entrepreneur, thought leader, Nandan, who knows how to make things to become reality. And I think that's why it's great to have somebody like Nandan here with us. And of course, I would say Tobias is an honorary member of the central banking community because he makes always very strong contributions in that respect. Now, tokenization, first, it's great that it has become a topic under which we can have a discussion like this. And tokenization in terms of its applicability to financial transactions. I think tokenization has a huge potential to contribute to our financial transactions and the financial systems in general. I would say at least in two directions, they can make very important contribution. First, it certainly can improve the way the financial system works today. The most where most developments have happened and most attention has been paid off is with payments and, well, obviously currencies, but those are the most elementary type of transactions. Now, today, if you see how a payment is done, what goes behind the scenes is tremendously complex, tremendously cumbersome, and it certainly would behoove us to make them far simpler. And that's something that tokenization can achieve. Today, for example, when you do a payment, usually there is a separation between messaging, reconciliation, and settlement. Given that separation, many mistakes can be made, controls can be lost, especially on KYC, AML, CFT. If you integrate everything, the efficiency of the system is quite assured. And this can be applied not only for payments, but for many other financial transactions. In that sense, tokenization also allows something that we can call programmability, which is to put everything, all the instructions, all the procedures, regulation, and so on, in a contained chip, I would say, that would allow the execution of very complex transactions to the point that many of them, for example, we don't do today. I mean, traditionally, if you have a discussion among economists, many contingent, the development of contingent assets or contingent transactions are limited in its application because we don't have a way to put them together and put them into play. Tokenization definitely could facilitate this, and therefore tokenization can really be the future of a financial system with the sophistication that today we cannot imagine. Another very attractive aspect of tokenization and of technological development is the fact that it would allow many countries to leapfrog from where they are today. India, for example, is a great example. And through one of the contributions that Nandan made happen, which is the identity of people, and to be able to map accounts with individuals in an unmistakable way. Really what you can do is to leapfrog from being very backward, very unsophisticated, to something where you really can achieve the financial system contribute to the well-being of the different nations. The contribution of this for inclusion is very, very significant, and that's why we are supporting this fully at the BIS. Now, one can make the following question: why the take-up outside crypto has been slow in tokenization? And I think part of it is because we have unleashed many efforts, but those efforts are isolated. We have not been able to fully come with a vision of how can we integrate that. We have tried it through the internet here, Nandan will speak later. I also will speak later about it. I really welcome what Piero just said about the fact that in the sphere of DCB, you are trying to integrate central bank money, commercial bank money, different assets, and to have a joint vision to promote this. If we have this vision, that could allow coordination devices, and we can go from individual innovations and making the parts in a way work together in a virtuous way. In a way, that's what we're trying to do at the BIS Innovation Hub. We also have started with very specific projects. Many of them do not fit together, but now we're paying attention on how they can fit together and how can we use a platform that can invite more private sector participation and make the system work as a whole. In terms of for example, the projects that we have been doing, let me mention two. For example, one is Agora, which is a first effort, major effort, where we're working with 40 commercial banks, 7 central banks, to really streamline dramatically cross-border payments. And this works based on tokenization. The enthusiasm is great, and this could be a major platform to really make cross-border payments extremely efficient. And again, this could be the infrastructure we're creating can be part of broader developments. The other is Project Pine. And Project Pine basically uses, I would say, the trilogy that I find that is important for a financial system of the future to have in tokenized way, wholesale CBDC in the way that Michelle expressed, commercial bank digital money, and government securities in tokenized fashion. And here the idea on the Project Pine is how can this be used in an integrated way to facilitate the implementation of monetary policy. So even for those purposes, the tokenization effort could be great. I would say that our imagination is the limit in terms of using tokenization to really shift the boundaries of the financial system. Today, again, it's difficult, very difficult to make transactions. A lot of progress has been made, but at some point we need to achieve, for example, what in telecommunications was achieved. Many years ago, like 10 years ago, you would have a messaging machine, you would have to access internet through a different device, you would have a different phone, you would have your camera. It would be tremendously difficult even to take a photograph and send it. Today you can do it immediately because everything is integrated. If we can do that in the financial system, we really would be making a huge breakthrough. And the important thing is the technology is there. The technology is not the limiting factors. What we need to work is on many different aspects, regulation, coordination, the provision of basic infrastructure by authorities to make this reality. I can comment more about that later, but in any case, I think that the tokenization has a big promise into the future.
Thanks so much, Agustin. And yes, so it's really the interplay between innovation, which may go in different directions, and then putting a policy framework and a regulatory structure around that. That is the current juncture in many aspects. So Nandan, you have worked with Agustin on this concept that you labeled the Finternet. So a kind of global payment system that is just as seamless as the internet. I think 30 or so years ago, we couldn't imagine something like the internet existing, and nowadays it is everywhere. And I think the Finternet sort of gets at that idea that perhaps for payments and financial services, we could have such a seamless object. So explain a little bit more your thinking around that, and particularly this intersection between the public and the private sector in that regard.
Oh, thank you. I think technology has been integral to financial services for several decades, and we have seen that whether it's in banking, the branch, you now go to a mobile phone app, payments are becoming instant. You can order an ETF or a mutual fund on a phone. So clearly, the financial sector has been at the leadership of applying technology to financial services. But all these solutions we have tend to be siloed, purpose-specific infrastructure with their own applications, their own data, their own maintenance. And clearly, we have to think about doing some things differently. And I think why we are excited by the idea of tokenization is that it is not about just digitizing the old way of doing things. It's designing a new foundation where money and assets are programmable, portable, and interoperable from day one. Now, that's a huge transformation if we can pull it off. And this is where the idea of the Finternet came in. The thing is that there have been a lot of efforts around the world on tokenization. Many central banks are trying to launch tokenized currency. Countries are talking about stable coins. Some people are trying to tokenize bonds, deposits. So we're seeing a lot of work happening. But if we really want to move the needle and get the whole world in a reasonable amount of time to be in this new financial metaphor, then we have to think differently. And the idea of the Finternet came about because Augustine and I met in Bangalore on the G20 meeting in February of 2023. And he had been writing about the Finternet, writing about this new financial architecture. And my colleagues and I, Pramod, Siddharth, and myself, had been working on population scale systems with billions of users and billions of transactions over the last several years. So we got together and said, can we apply that population scale generic approach to tokenization? And that's how was born the idea of the Finternet. And this was a paper which we started thinking about in February 23 and actually published the paper only in April of 24. Now, what we are trying to do is come out with a roadmap on how we can tokenize assets across the world. So basically, there are three important ways we look at it. One is we should design this to be user-centric. It's not about institutions. It's about putting the power of tokenization in the hands of the user, where the user can buy, sell, transfer assets of any type. So user centricity is a big fundamental belief in the Finternet. The second is it should be a unified architecture for all types of assets. In other words, whether the asset is money or securities, property, liabilities, whatever it is, bonds, they should all be able to work with the same infrastructure. So this asset agnostic approach is very important to create a unified approach. And the third thing is that this is not for any purpose or geography, but to create a universal infrastructure for the world which is capable of doing this. And it should be able to be used anywhere. And we felt that if we put this point of view across, then we're at least creating a vision of what is possible and how it can be done in a more systematic fashion. Now, it's exactly a year since we released this paper. It was April of 24, and a lot has happened since then. We find that the technology is actually quite mature enough. We thought it was experimental, but we believe it's more mature. Then second is that all over the world, the regulatory momentum is picking up to create a framework for having tokenized assets. And I think there's a sense of possibility everywhere. And as Augustine mentioned, we come from a background of actually getting things done. So that's where we have been working in the last 1 year. We have created a lot of the basic tools for how this Finternet would look like, how you do credentialing, how you would create wallets. We have a universal information tokenized system, and we're actually demonstrating that you can do transactions at billions of transaction level using public chain technology. But we're not wedded to any technology. It's agnostic to which technology that we use. And pilots are underway today, both with central bankers and with companies. And we think over the next few months, by December of this year, we'll actually have enough working technology to show this working. And these are in multiple areas, deposits and wallets, ledgers, and so on. So I think we believe that the time has come to really implement the Finternet approach. And if we can work with making it user-centric, universal, and unified, we're really going to create a financial network that works for everyone, everywhere. And it's really a question of moving it now. I think we can demonstrate in the next few months that technology is not going to be the challenge. Technology will be available. It will be available as open source. Any country, any company can use it. It's really about applying it in a regulatory framework for the kind of assets that we want. So that's where we are after 1 year. And we are very confident that if the world embraces this approach, we can get there much faster.
Great, thanks so much for that insight. Let me turn back to Piero and ask about the broader capital market implications. I think Agustin and Nandan already alluded to that, and Michelle as well. So how do you see sort of like what central banks are doing on tokenization linked to the broader capital market developments that are oftentimes beyond the normal operational reach of central banks?
So this question is particularly interesting for the European market. We come from a situation where our markets are completely fragmented. I don't even remember how many trading venues we have. I think we are in the order of 41. We have something like 27 CSD in Europe. It's hard to talk about capital market, in this condition. Fragmentation is a high cost. Access to finance is a problem. Market-based finance for small and medium enterprise is a problem. So we see our effort in terms of developing a unified ledger or some new platform based on tokenization as also an effort to improve the condition of the capital, at least the backbone of a financial capital, unified financial capital markets in Europe. And to simplify, I can simplify by thinking two dimension, right? The potential, the transformational potential of DLT, I think can be clustered in two groups. As Agustin was saying, we can think of things that we already do and we can do it in a more efficient way. And those are the low-hanging fruit. And then there is another dimension. What can we do with DLT or tokenization that we cannot do today because of the way we treat money? Now, on the first front is pretty simple, right? For just to give you some example, DLT would allow you to trade 24/7, 360 days. So basically, we could have a unified, platform working around the clock all year long. Second, if you think today the three key functions of the trading is, the negotiation, the settlement, and the custody are done on the three different platforms. We could bring on the DLT on the same platform the three functions. This would reduce reconciliation costs, time, and data processing. Third, if you think the effort we are making to move to T plus something, right? Through digitalization, through DLT, we could move to T plus 0 immediately. So all this, at the end of the day, would reduce costs and make it a more efficient market. But the key difference will be thinking about DLT as an enabler, as has been said, for new services. And to me, everything boils down to one single concept. Digitalization changes the nature of money. Money is not any longer a scriptural, is a file, a very sophisticated file, but is a file. So on a file, you can put all the conditions you want, and so you can decide when to pay, how to pay, conditional on all possible state of the world. So this is the kind of transformational that we need to implement to make the financial service and the financial sector to a different stage. But let me conclude. This is not an easy road. It's a bumpy road, and many things can go wrong. So we need to do it in a very attentive way, because we can end up in new fragmentation. We could end up in a system where competition is low, and we could end up in a situation where we will be stuck with the new technology for a long time. So we need, something that avoids fragmentation, increase competition, and make sure that innovation stays hard even at the infrastructure level. Let me stop here.
Thanks so much, Piero. And I certainly hear no lack of ambition on this panel. I think Piero, really aims at the broader financial market integration. From Nanan, we heard, a really a very foundational innovation around finance. So, Michelle, turning back to you, how do you see the role of central banks in all of this? Money, of course, is the foundation of the financial system. Central banks have a clear mandate. How can central banks help in this, broader transition to a new technological underpinning, to innovation, and as you already alluded to this tight interconnection with the private sector?
Thanks, Tobias. I think central banks do have a role. One of our own strategic priorities at the Reserve Bank of Australia is to help shape the future of money. Now, I don't mean dictate the future of money. I don't mean mandate the future of money, but I think helping to determine the future of money is really important. From our own perspective, and I think many central banks, we are all in the payment system. We issue banknotes. We're all operating RTGS systems. In our own case, we're also supervisors of financial market infrastructures, which are a very important potential use case for tokenisation. So against all that, I think it's incumbent upon central banks to take an interest in this and work with the commercial sector. We need to be working with them, I think. So it's sort of a catalyst role, but it's also a little bit more than that. I think it's a partnership role as well. And I think what central banks can bring, and I think what I think of ourselves of bringing, is the role of leadership in terms of what's in public policy's interests as well, because these things are, yes, it's commercial, but it's really critical to the economy for all the reasons we've spoken about. So there is a very big public policy interest in this as well, and I think that's what central banks can bring to this. So in our own thinking about this, some of the questions we'll be asking ourselves as we go through these exercises are, for example, how will this innovation promote and be consistent with monetary and financial stability? Because that's obviously important to us. What sort of issues are there for the tokenisation of potential asset classes, and how will they promote safety and resilience as well as efficiency of markets? So I think these are really important questions, and central banks bring that perspective to it. I also think that if central banks come at it from just a very reactive way, I think we'll be completely behind the curve, and we might end up with circumstances which aren't ideal. So, for example, at the moment, we've already talked about the fact that settlement in central bank money is the safest way to do it. It's not the only way, but it is. And a lot of all our high value systems at the moment, they settle in central bank money. So if we don't engage with this and think about how the new tokenisation might be, you might pair with payments, then we might get left out of it, and that mightn't have good results for financial stability and settlement risk. So again, we think we're not going to drive this, we're not going to tell people what to do, but I think it's really important we're engaged in it, how central bank money might be used in these circumstances, and what the policy implications might be of that. And there's another point here I think is worth making, is that other regulatory authorities, for example, prudential regulators, consumer regulators, and the government are also potentially interested in all these issues as well. So we need to be thinking about who we're partnering with, the breadth of our stakeholders. Ultimately, these sorts of things are networks, and they need lots of stakeholders cooperating in order to make them work. So that's how I see our role.
Thanks so much, Michelle. And leading on to onto that, let me turn back to Agustin and ask about the coordination, cooperation across countries. Of course, Michelle mentioned, settlement issues, but there are also broader, issues around governance and legal certainty, which are extremely important across countries. So how do you see that playing out across countries, and not just advanced economies, but also emerging markets and developing economies?
Well, it's very important to have coordination and cooperation internationally, but primarily, I would say at the beginning, nationally. Now, the main coordination has to be between authorities. I think central banks should play a leading role, but also how to engage with the private sector. Most of the development, most of the operation, whoever will be tokenizing assets will be the private sector. Now, I think what is key is to steer the cooperation and to steer the participation of the private sector in a more coherent fashion. What we see in technology is that there are very big players, they tend to dominate the game, and we can end up with walled gardens, where you have fragmentation and you don't have a lot of integration. So we need to exploit the energy, the knowledge, the resources of the private sector, but in a way that brings together an efficient, competitive financial system open to everybody. The other important part, the other important pillar is to preserve and to make this system grow out of the features that we have in today's traditional banking system. Piero called it old-fashioned. I don't think it's old-fashioned. I think it's essential is to have the trust that a central bank brings in itself, which is to facilitate the singleness of money and finality. I think precisely to preserve that element of trust is essential. So given these two conditions, one, that we need to sort of steer the participation of the private sector, and to preserve this trust, how should the central banks behave? Again, let me emphasize, number one, we need to express much clearly and articulate more clearly what is the vision, in a way that this can facilitate joint experimentation. We need to get people working towards a common goal, but we need to try to bring that picture together. Number two, we need, as Michelle mentioned, we need to develop an appropriate regulatory framework. This has to do, we need regulatory clarity around issues like the status of tokenized assets, data privacy, the legal enforceability of smart contracts, and the relationship between tokenized assets and their non-tokenized counterparts. We need to assure interoperability between not only across jurisdictions, but between traditional and new expressions of the financial system. We need to be able to fully comply with AML, CFT, and KYC. Third, I think that, again, central banks and authorities should provide the basic foundational assets and platforms. And this is something that happens today. So it's not an additional ask of what we do today already. Now, we have to do this in a way that it has the adequate technological representation. So here I'm talking about wholesale CBDC, tokenized deposits, and tokenized government bonds, and to facilitate the tokenization of different assets. And also, we might support the provision of basic financial infrastructure, basically how to connect the unified ledgers to support interoperability between the tokenized financial system. And fourth, I think we need to work for private-public partnerships. I think that is essential. I think there's a lot that the private sector can bring to the table. Most of it, I would say, is there, but we need to find ways to coordinate this. I think a lot of the work that Nandan is doing it will be tremendously powerful towards these four goals, and it would facilitate to get where we want. In terms of coordination among central banks, well, that's what the BIS is there for. We are the bank of the central banks. The fact that the BIS has been doing a lot of work on this is just an expression of the interest on the central banks in this subject matter. We don't have a life on our own. We respond to the needs of the central banks, to the expression of interest. So what we have done through the hub is more than anything of an expression of the interest and the relevance that central bank attributes to this subject. So in any way, I think the BIS will continue supporting this effort, and I think the IMF through the reach you have to your universal membership, your capacity development and so on, can also facilitate more synergies among international institutions.
Yeah, thanks so much. And so, one of the things you pointed to is AML CFT. And so Nandan, so how do you think about the public and private sector interplay? And more specifically, sort of like on the one hand, you want to have sort of like ease of payments and privacy, right, which is foundational for money. But on the other hand, you need to ensure integrity, AML, CFT compliance. So, how do you think about that in the vision for the tokenized financial system?
Well, I think like everything else, we have to find the balance between the role of the public sector in framing the rules of the game, in the regulations that will govern the tokenization. And once those rules are well defined and the playing field is defined, then market players will innovate and create solutions. And the third leg of that is technology, because tokenization technology needs to be demystified and made available in a much larger way, which is what we are doing, which is creating Finternet labs across the world, the US, Europe, India, and Singapore, and building the composable building blocks to make this happen so that we can accelerate the deployment of tokenization in the real world. And I think over the next few years, if we really put our hearts and minds on it, we can actually see significant progress. And it's really up to the people in this room to drive this, because this has such enormous value for society, such enormous value for inclusion, such enormous value for economic progress, that we have to make every effort to expedite that. And we are on this journey, and anybody can join us if they want on the Finternet journey. So please, we are welcome.
Okay, thank you so much. So this is the end of this fascinating panel. I think there are many topics to explore. Let me again thank Agustin particularly for his long service in the international community. This is the last time you're at one of these IMF World Bank meetings in official capacity, but we are all looking forward to working with you in your next chapter. Thank you so much for all panelists, and thanks for your interest in this very important topic.
Thank you.